How's it going, guys? My name is Ishan, and in today's video we're going to be talking about good old blue chip stock Microsoft and why it could have an easy squeeze higher of 10 to 20% from here. And look, I know it's not your 10x or 20x SPAC, but it's a safe and solid investment that's going to yield you some nice gains. Its earnings are right around the corner, so we're going to be covering some things that you need to know before then, and then a full discounted cash flow model showing you exactly how undervalued the company truly is right now. And at the end, we're also going to do a quick technical analysis showing the huge opportunity that Microsoft has for a squeeze higher. So make sure to drop a quick sub and a like because it really supports the channel, and let's get to it. So as for my current position, I currently have 3 June 2021 calls for the $240 strike. I'm currently up about $1,000 with an average of 8.7, so I'm definitely enjoying these gains, but I will not be selling for the reasons we'll be discussing in this video, along with the actual price target of what Microsoft should really be at. Microsoft reports earnings on Tuesday, January 6th next week, where they're expected to post EPS of $1.63 and revenues of $40.2 billion, which would be up 9% year over year. So pretty decent numbers, but what makes Microsoft such an interesting blue chip stock out of many is how diversified their business is. From cloud to gaming to hardware and even communication software, they have a foot in every door of so many different industries. The revenue from Microsoft Azure, which is their cloud business, grew 48% year over year last quarter, and analysts expect Azure revenue to rise 41% to $6.9 billion in quarter two. I mean, this is almost a $30 billion cloud business, still growing well above 40%, and just goes to show how dominant they really are. You don't see this very often, especially with so many other cloud companies in the industry that first of all have much lower revenues and are barely able to keep their growth rate consistent. And you gotta give props to Satya Nadella, who's truly inspired this change since he took over as CEO. And as we only saw last week, Microsoft invested in GM's autonomous company Cruise, and through this, Cruise will leverage Azure to commercialize its autonomous vehicle solutions at scale, and Microsoft will have yet another massive client. So overall, I think they will definitely smash earnings, especially with how well segments like Teams is doing because of the pandemic. Then also the launch of their new Xbox will be driving sales in that segment as well. But now let's take a look at a discounted cash flow model I created to show you guys how undervalued Microsoft really is right now. Real quick before we jump into the DCF model, I want you guys to comment down below and let me know if you want me to break down how to exactly create one and read these kind of things, because I know some of you guys have probably never seen this before in your lives. So let me know down below if you want me to create a video going completely in depth on how to use it. But basically what we're going to be doing in this DCF model is figuring out how much is Microsoft valued today based on their future projections and how much free cash flow they're going to be generating down the line in the future. We're basically seeing whatever they're worth in the future, how much is that worth today in today's numbers. So taking a look at the DCF model I created, we're going to be using the standard 21% tax rate. You know, Joe Biden might raise that, he might not, who knows, but for now we'll still use that 21% tax rate. As for the discount rate, we're going to be sticking with 7.2%. So discount rate or cost of equity is basically the interest rate used to find the present value of future cash flows. Then for the perpetual growth rate, we're going to be using 2.04%, which is about the average of the US long-term bond yields. Then the current price as of me recording this is $225, and Microsoft has 7.5 billion shares outstanding. So wow, that's a lot of shares. So going down and looking at the discounted cash flow. So for those of you guys who do not know what free cash flow is, it's basically the cash that a company generates from its business operations after subtracting capital expenditures. The numbers I've taken are from various analysts. You can see for the 2021 number, this is the free cash flow from 15 analysts and so on and so on. And so I've created a 10-year discounted cash flow from 2021 all the way to 2030. And as we can see, we have about 49 billion in 2021 of free cash flow, going down to 2030 where we have about 131 billion in free cash flow and an estimated growth rate of about 4.5%. And then if we add all this free cash flow up and use the discounted rate of 7.2%, that's about $599 billion alone just in present value for these 10 years of discounted cash flow. So then through that we can calculate the terminal value of the company to be about $2.5 trillion. So essentially after the 10 years, this will be the value of Microsoft for perpetuity. And so then using the discounted rate of 7.2%, we can see that the present value of the company would be about $1.2 trillion. And so by adding the present value and the discounted cash flow, we can see that the total equity value and total intrinsic value of Microsoft is actually $1.8 trillion. Currently, the company has a market cap of about 1.7 trillion, meaning if we take that 1.8 trillion and divide it by the total number of shares outstanding, which is 7.5 billion, we get a price of $250 a share. So meaning currently Microsoft, which is trading around 225, the stock is trading at a 10% discount, meaning the stock still has 10% discount to be fairly valued based on these numbers. So for a company like this to be trading at a 10% discount, this makes Microsoft one of the best blue chip stocks to be buying right now. And plus, it's a 10% discount for only being fairly valued. I think this stock could easily have 20 to 30% upside more to be trading at relatively the same as the rest of its peers who are trading well above their actual intrinsic value. This could have an easy 10 to 20% upside after its earnings, and as we're going to be taking a look at in just a moment, the technicals are lining up for an easy 10 to 20% squeeze if we get positive numbers. Real quick before I jump into the technicals, if you're trying to learn technical analysis and how I found so many stocks, as an example, Neo, Appian, which I called at 45, which is now at like 150. Plug Power I called at 10, which is now at 70. Be sure to check out the Gen Z Trader Academy. I've created over 5 hours of course curriculum that goes in depth on everything from technicals to fundamentals, and it's a great way to learn something new while also supporting the channel. So taking a look at the technicals and taking a look at the 6-month 4-hour chart, we can see that for the last 6 months, Microsoft really hasn't moved that much. It's been trading in this $228 to $200 range for a while now. But as we can see, something interesting is starting to happen. We can see that we've been slowly forming higher highs and higher lows. You can see here, we formed a low, the next low was higher than the previous one, and so on and so on. And it looks like we're forming an ascending triangle with the horizontal resistance at this 228, 230 level. As you can see, the range is slowly getting tighter and tighter with this horizontal and diagonal line right over here. We're forming an ascending triangle. I believe that this stock really has the opportunity to squeeze over this resistance, because you best believe many short sellers have their stop losses right above here. Every time the stock comes up to this 228 level, it gets pushed back down. So if we can get really good earnings, like as we saw with Netflix, which also soared after it had been trading in the same range for so long, I believe Microsoft could have the same thing happen. And I really think that a good short squeeze could end up happening if they can deliver on their earnings. With the whole pandemic and everything that's been going on, Microsoft's business has been seeing a resurgence again with a lot of people starting to use their tools. I really believe that Microsoft could see a pretty good short squeeze from here. We're forming an ascending triangle, higher highs and higher lows. Everything is setting up for a really good squeeze higher. So that's the video, guys. If you appreciated this value-packed video, make sure to drop a quick sub and like, and be sure to support the channel by checking out the Gen Z Trader Academy link down below. And also, with that being said, let me know down below what you guys think about Microsoft stock. How many shares do you hold? Are you planning to buy? Do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.